in the guardianship world, which is a little different than just taxes for every other taxpayer. So I actually, on top of everything else, have to leave in 2 minutes. So I am introducing our presenters and then taking off. So Julie, do you need to do any more bookkeeping before Carla starts?
No, I think we're probably okay.
Okay.
I can do some bookkeeping at the end with the Facebook group and a couple other things.
Great, great. Okay, Carla, I'm so sorry I can't stay, and I'm so glad you're here, you guys. She is one of a million, and her staff, they know guardianship and taxes like nobody else understands it. So thank you guys for being here. I'm gonna stay for just 3 minutes to hear some of this stuff.
Okay, we're gonna get this set up to get going. My name's Nicole Finnegan. I'm Carla's business partner. She's gonna start us off. Give us a couple of seconds to get the screen share going and the slideshow so that we can get going. Here we go. Yeah.
Okay. Okay, so Teresa had asked me to, or asked us to talk about taxes, what guardians need to know. And so we've broken it down for local, state, and federal, and then sort of other. So you guys feel free to ask questions along the way. We have slides. Perhaps if you can just wait till we get to the end of each slide for any questions regarding that slide, that would be helpful. So the overview, like I said, is going to be the local taxes, and I'm going to touch on the court guardianship accounting requirements. And then there's state taxes. Florida, we're a pretty good state. We don't really have any, but there's other states. And then we have the federal taxes, and then some other like helpful hints so that you guys, if you're gathering stuff up for your clients to give to a CPA, you know, the type of stuff that we look for that we need. Okay, so I'm going to start with the local taxes. For the guardianship accounting, there's that for the courts. And then there's also a lot of special needs trusts that a lot of the guardians, the wards have. And I'm going to assume that most of you are familiar with special needs trusts. What I have found on my end when preparing the accounting, that the court will want not only the guardianship accounting, but also the special needs trust accounting, and that they go hand in hand. So that oftentimes two have to be done. So we prepare quite a few of those, and honestly, by county, kind of determines the format that the auditor wants to see it in. So we've attached examples of different types because they can be produced. The software system that we use, we can produce the reports a variety of ways. Sometimes the report is done 2 or 3 ways and given to the auditor because it helps. They basically want the work done for them, so that it helps them to do that. And sometimes they have questions and they're willing to take what I call more the layperson's report versus the standard state report. So I'm going to click on the link so that you can see the different types of reports. Here's the first one. So this is a guardianship one, and this is not the state example. This is what we call a summary, and it's easier for the layperson to read. So if you are they able to?
Yeah, they can see that.
Yeah, but are they able to scroll through it? Or I'll just scroll through it. So the first page summarizes everything. It is done on a cost basis, knowing full well that fair market value has to be presented to the courts. That always shows up on the principal balance on hand at the end. So if I scroll down here for you guys, you can see that this is combined, and then the next page shows the balance at the beginning of the reporting time frame, and then there's gains and losses, and then this is the principal balance at the end. And so that's the key sheet. The current value column is the fair market value, and the fiduciary acquisition value column is the cost basis. So after that is all the receipts of income, categorized whichever way is good for the user. The guardianship ones are usually pretty easy as far as they have Social Security, they may have a little bit of other income, not a ton of expenses. Let's see. Stuck. It's not scrolling. Hold on a second. Trying to get to my expenses.
Could be that Citrix is frozen. Yeah, our system might
Hold
be
on.
having a hiccup.
Yeah. Give us a second.
There
Okay,
we
so
go.
then there's disbursements of income. And in this case, there's a true link account. Again, it comes down to the auditor. Most of them are pretty good with just seeing that the true link doesn't have to be broken down. We've had some auditors that require the true link statements. A lot of stuff goes on true link. For the most part, we don't put in the detail of it because we haven't been asked to do that. And that would be quite voluminous. So most of the courts have been pretty good about just taking the copies of the statements and looking at them to make sure that nothing, wild and crazy is going on in there. Okay, so our system,
Is it stuffing? The air is from.
yeah. Mhm. Okay, here we
Yeah, we're connection. Oh, it closed down on us
go.
altogether.
What do I do?
Okay.
I'm sorry, guys. Give us a second. Our cloud disconnected us for some reason.
That's okay. And that's actually why we asked for your guys' presentation too. If you guys need us to pull it up on our end, we
Okay,
can do that too.
Give me 1 minute to see, but Carla can probably take some questions while I do that. If
Sure,
anyone has
yeah.
questions, so that we don't lose time.
Yeah.
If you guys have questions, you can speak up. You can also put it in the chat if you can't get unmuted for some reason. Catherine has a question. She wanted to know where did you get the cost basis from? And is this different in various counties?
So the cost basis is when the initial inventory is given to you. That's the cost basis of, let's say the person owns 5 or 6 stocks, whatever the cost of that stock was. That's the basis, that's the original basis. And that information is important.
You are here.
Yeah, but that's okay. I was ready to go back.
Keep going.
So the cost basis is information that you're going to have, like if somebody sells something, to calculate the gain or loss. If something new is purchased, if let's say they sell a stock and they buy another stock, buy an asset, that's the cost basis of it. The fair market value is what changes, on a monthly, yearly basis based on market. Both are required to be depicted. So that first report that I gave you, like I said, that's sort of the layperson's because it's easier to read. This next one, I have it. It's the accounting for the court, the Florida court system. And I've depicted it 2 different ways. The first one I'm going to show you is by account, and the second one is by date. And again, it comes down to what the auditor wants. I've seen it both ways. It just depends. So this one is by account. So this should look, I guess, familiar to you if you've done any of your guardianship accountings already. This is the format that you're used to seeing, the summary page. You know, breaking it in between income and principal and total. And then here's the previous inventory. Again, it's showing it at estimated value, which is fair market value, and then carrying value is cost basis. Then here's the schedules, the receipts. And this is going by account, and then here's disbursements. And that's it. Nikki, how do I get up to the next slide? Huh?
Yeah.
And then this is going to be the same numbers, except now it's going to be shown by date. So it puts it in the date order for the people, the auditors. So that's the guardianship accounting. Does anybody have any questions on the guardianship part? Because I'm going to go into special needs trusts next. So the special needs trusts usually have more volume to it. The whole reason the wards have a trust is because there's more money, more assets. Again, the courts, a lot of time, if there's a guardianship and there's a SNIT involved, they want to see both, even though they're technically, I guess, not entitled to the SNIT. I'm not sure. So they're produced. Again, sort of three choices. This is the layperson's choice, which shows a lot more. In this case, you can see there's a whole lot more funds going on, cash. In this case, there's an IRA, which a lot of times a ward ends up having. In this particular case, the auditor started down the path of requesting us to actually do an accounting for the IRA. And we were like, no, you know, that was argued and it was decided, no, that's not necessary. The ward's only entitled to get a distribution out of the IRA, and you know, the income and all that stuff doesn't even come into play on a tax return or anything. So, but it does get depicted here. So, you know, the gains and losses, disbursements of principal. This is the key sheet that's showing, again, current values, fair market value, and fiduciary acquisition value as the cost basis. So that, in this case, the SNIT is worth, in this case, the asset, the market went down, so the fair market value of 366 is actually less than the cost basis of 442.
I think you accidentally drew on the screen.
What I do?
Annotate by accident, but it's okay. Just close out.
Okay. How do I make it go?
I have no idea.
At the bottom left, there should be like a little
Oh, I see.
looking thing. You can do eraser.
Okay. Oh, red marks.
I can't get it up right now.
Okay, it's no big deal.
It's a tax class and an art class.
I can't.
So there's the SNP by account.
Okay, I don't know what happened, but now I can't get out of this and I can't click on any of my stuff.
Okay, go back to what, do you see at the top?
Yeah. Mouse.
Go back to the little pen.
Okay. I don't know how this got selected.
Yeah.
There's one up. So there's one up there.
Yeah, but is it this? Is it because someone clicked on this by accident? And it's on draw. We want it on
I-
select. Mouse. Save. I can't get out of this.
Could you try exiting out of the PowerPoint and going back?
Yes. Okay. On Zoom, I think it's a Zoom thing. It's not a PowerPoint thing.
It's on Zoom, you said?
Give me a second. I'm sorry. Oh,
All
no.
right.
Okay, hold on, I have to put him back on this.
Go. Go in there.
Stop sharing. Okay.
Okay.
See. Okay, I think we're back in business. Let's double.
All right, great.
Sorry.
No worries.
So back to, again, this SNP trust. It can be done the court method. Again, this one is done by account. Because there's a lot more accounts to this one, it'll make more sense. So it starts with the Chase checking account and then the Schwab account. So it's giving all the transactions broken down by account. This one, the example by date. Then it's going to sort of mix everything up together, but it's going to go strictly by the date. Most of the auditors like to see it by account because they're trying to get to the beginning and the end, just like you are or I am when I'm doing the accounting. So their preference is sort of to see it by account, but again, send a report. So those are the different accountings for the guardianship / special needs trust. Does anybody have any questions about those? Is there something in the chat?
No, I'm monitoring the chat. There's nothing in there.
Okay. Okay, so then next, do I just close?
1 second, there's a message in the chat. Diana says, hi, I've been providing my ward's aged pool trust info to my CPA when I provide the 1099s for the Social Security, retirement company, pension, and stock dividends. Is the pooled trust info necessary for the federal income tax?
Yes, they're probably getting a grantor, what we call a substitute K-1. So the pooled trust is giving information. It comes what we call in a grantor letter, and that is similar to a K-1, and that information needs to go on the person's 1040. Okay. Okay, so after local taxes, there's state taxes. Now, in the state of Florida, we don't have any tax. We don't have a state tax. But you have to be aware of your client's income source. So for instance, one of the ones I do, she gets royalties from the state of Oklahoma. So Oklahoma has a state tax. Pretty much all of the other states, with the exception of 5 or 6 states, there's not a state tax, but the majority of the others all have a state tax. So you do have to be aware of that, because that sometimes there's withholding that goes along and the state's going to know about it. But you need to inquire with whoever's preparing the return about, gee, do I need to prepare a state tax return? Sometimes wards move from another state to here and they have something lingering from the other state before they arrive in Florida. So you need to take that into account as well. So the state part's pretty easy for Florida. Any questions for that? Okay, so I'm going to turn it over to Becky with our office, Becky Cassidy, for the federal tax portion.
Hello, everybody. So hopefully some things that you already do know, but if not, hopefully we cover them. Federal tax requirements, thresholds. There's a link in here and it's a general table. As of course, everything in the world of accounting, there's always an exception. So this is a good rule to kind of go by as a guideline, but don't take it as gospel because there's always something that will affect it. But in general, you've got your threshold levels here by your filing status, your age, kind of a good guideline to have. Big exception to this is if you ever have any withholding on a document, be it state or federal, if you don't file, you cannot get that money back. So even if you are not meeting this file requirement threshold, to get that money back for your client, you're going to have to file. So kind of some other little tidbits down here at the bottom in terms of exception situations. I believe you guys got all of these as handouts. Good to have. I don't necessarily want to read it line by line because that'll bore you if you can read it yourselves. But deadlines in general for a 1040, your deadline is April 15th, unless in the world of Florida you have hurricanes and COVID and all of these other things that are changing deadlines. But for the year that we're in, for 2022, the deadline is currently April 15th. Extensions, big thing to be aware of. An extension is available, but it must be filed. You can't, although the extension is automatic once filed, it is not just a given extension. You actually have to file the paper form. Or electronically, yes, it can be done electronically. But that form has to be submitted somehow. Most states will go along with a federal extension. However, there are some states that want their own extension. So if you do have a state situation where you have to file in that state for an income source, definitely look into whether or not they accept a federal extension. With extensions, the biggest thing everyone seems to get caught up on is just because you filed an extension That doesn't mean they're giving you permission to extend your payment. The extension is an extension to file, not to pay. The government always wants their money as soon as they can get it. So please be aware of that. It also falls into the next point there of estimated payments. So when you are doing an extension, you can make a payment with your extension. You could be making payments throughout the year, depending on your income, whether or not you've got withholding on documents, different ways that you can do it. But in general, to be safe, the rule is, and I'm looking to make sure I phrase it correctly, 90% of the tax shown on the 2022 return, or 100% of the tax shown on the 21 return, unless your gross income is over a threshold of 150,000 or 75,000 if my screen just went bonkers. There we go. Sorry. Or the threshold of 75,000 if you're married, pregnant, single. So that being said, we do a lot of tax planning at the end of the year. We do calculations to kind of see what the trend is for where you were the prior year, what you're looking like the current year, whether or not an extension payment would be required, whether or not you need to make estimated tax payments. Always kind of good to look at the end of the year before you get to January so that you're not kind of doing an oops, I should have, and can catch it in time to make a payment. Does anybody have any questions on that stuff?
Well, we have a comment in the chat. Catherine said it's her understanding that this year's filing date is April 18th.
It is April 18th because there is a holiday in Washington, D.C. So with that holiday in Washington, D.C., it always bumps the federal filing date.
It's the same as if it falls in a weekend.
Yeah, same. Yeah, if the 15th were to fall onto a weekend, it would also bump the date. We live and die and tell everyone the 15th, just because those extra couple of days, we don't want to leave things till the last minute. We would love to have every extension and everything filed on 4/15 so that 2 o'clock we can be sitting with a glass of wine and enjoying ourselves. But that doesn't always happen. So yeah, we live by the 15th, but yes, in actuality, it is the 18th this year. Any other questions? No? Okay, I'm going to click to the next one here. Oops, maybe. Did I click too far? No. Okay, so items that might be helpful to you guys. We do have a bunch of tax forms linked on here in further slides, but in general, the power of attorney is what gives us authorization, or you authorization, to contact the IRS for purposes of replying to notices, requesting transcripts, any kind of documentation that was submitted to the IRS with your client's tax ID number that may need to be included in a form. I can click on this lovely link. You probably all know what this looks like, but most of this information is automatically filled by the tax software that we use. Multiple tax preparers can be listed on it. We typically list everyone in our office just in case. All the CPAs. That way, if one of us is on vacation or unavailable, we can still reach out and get information for you. Down a little bit further, it asks you to list what type of tax, what form. Typically, it's something as basic as income 1040, and we normally put a 2 to 3 year period on here, depending on what we're working on. The big thing to know with power of attorneys, it used to be if you ever had a joint return, both taxpayer and spouse could be listed on one. Now it is actually a power of attorney per person on the return. So you have to have a signed power of attorney for each person on the return if you're trying to get joint return information. And then this 4506 is a request for a copy of a tax return. This little window blocking my link, sorry. So 4506, once again, a lot of this information can be pre-filled by a lot of the tax software. So don't let all of these lines scare you. Most of them are easy to fill out, but it kind of walks you through periods requested, forms requested. There is a fee to request returns. Most of the time I go by transcripts and whatnot with the IRS, but the form is available if you need a full copy of the return. There is a EZ form. as well. I think this is the same link. Unfortunately, I apologize. Oh, there it is. Further down, request a transcript of return. Once again, a whole bunch of not necessarily legalese, but IRS talk. Don't let it scare you. It can be easily filled out. And there's always help available. And down here, let's see, next one, our organizers. Biggest thing with organizers, we put them out there to help you guide us to the questions that we may need to ask. We don't necessarily know what has happened in a full year of their life, your life. So we don't know what to ask, what to look for. So these questions are hopefully to jog your memory, to kind of walk you through, did something happen? Is it taxable? Do I need to bring it up? Don't need to plan for it. Hopefully it's a quick, fly through the list. Yes, no, it makes sense. If there's ever a question, make a note of it, bring it up, ask the question. But a lot of this is truly trying to help you lead us to what we might need to find out from you, what we might need to ask for, what we might need to plan for. So a lot of these things, are as simple as, did you sell stock? Did you sell a house? Did you have retirement distributions? Did you, some of these things you can kind of look for. Health insurance, they're whispering to me health insurance. But you can kind of walk through, it's just a good general guide, whether it's for you and your guardianship work, you on your personal return, just a good source of kind of running through the year and what you might need to consider. And then the next one down, the tax organizer, I believe this is a sample of a basic organizer. It's only 4 pages long. Some of these organizers can get really in depth. A lot of the ones that we produce from our software, and it fills out a lot of information from the prior year. In general, this is a blank kind of basic, applies to everyone organizer. Gathering information, again, some questions to kind of guide you as to what you might need to be gathering or looking for. Yeah, this is a generic for a new client, someone that we don't have historical information for, so we can't produce any kind of form that has prior year information to kind of jog memory. But a lot of these things, you don't have to feel the need to fill out, every number, but list the form. If I worked at Target, okay, I write Target in there and I make sure to attach the W-2 from Target. If I have Charles Schwab or something else, I can write it in there as a, check for me. Yes, I gathered it. So we're not expecting you to fill this out as if you're preparing your own return, but it is a good summary guideline for what forms you should be attaching, what forms we should be looking for. Just kind of scrolling through it, fly through it. I think you guys have copies of these.
We usually also want the form.
Yeah, we definitely want the form. It is always best to
Like the full
have the
stuff, yeah.
form. Especially when you get to these things with investments, with these consolidated 1099s, which I think I don't think I was able to get a copy of it because they're very specific to clients. It's very hard to find a generic copy, but a lot of these investment statements have more detail on them than you probably think you need. But when it comes to filling out the tax return, we really do need it. With foreign investments, with cost basis, with all sorts of things. So definitely send the whole thing. If it's 20 pages, all 20 pages, not just the first 3 that look like summary pages. I cannot tell you how many times I've gotten the first 3 pages and they're like, oh, that's all you need to know. Well, that first 3 pages, I'm missing cost. So really I need the cost basis. It's on those other 17 pages of that
The
statement.
supplemental information for some of the investments
Yeah.
like bonds and.
Sometimes they don't list anything on the actual summary. They list everything in memos and detail pages further in the statement. So as much information as you can give with investments, and don't be afraid, especially in the digital age, to send a document. If we don't need it, then we put it aside. If we do need it, then we have it. But don't feel concerned about sending us too much. I'd rather have too much than none. But here's some, like I said, just kind of walk you through different expenses, different things to look for. Get out of here. I think you guys all have samples of these, but Any questions on any of that?
We do have a couple questions. We are going to be sending out the PowerPoint and all of these forms after the presentations, just so everybody knows, so you guys will have copies. But we have two questions, or well, a statement and a question. Diana says she uses Form 56, Notice Concerning Fiduciary Relationship, indicating the guardianship, and provide the guardianship documents with her driver's license. That's what Diana does. So that was her comment. And then somebody asked, how much is the fee? So I think you mentioned the fee for some of the stuff in this section. How much is the fee?
The 4506 has a fee, I believe it's $43 per return that you're requesting for. In terms of filing a 2848, there's no fee. You can find a fillable copy of most of these forms online. You can fill it out and submit it with the instructions that are given in terms of fax or mailing date, or sorry, mailing address. But yeah, most of them are not a fee per se to complete the form. It's just, for this case, it's a $43 fee for every return that you're requesting a copy of.
That's the only two questions I saw in the chat. Does anybody have any other questions?
I do, Diana.
Go ahead.
I'm not sure I understand the 2848, because when I was trying to do that before, it didn't say anything about guardianship. It just talked about power of attorney, which I don't have for my clients. I only have guardianship. So I was told to switch to the Form 56 because it states you can check a box regarding guardianship, and it says specifically court appointment of guardian or conservator. So the 2848 doesn't say anything about guardianship, is my understanding, but the 56 does.
You have to do both together.
Oh, nobody ever told me that. How can you do something about a power of attorney when you don't have a power of attorney?
Because this power of attorney is limited. It's just to be able to contact the IRS.
That's all it does.
The IRS was the one who told me to do the Form 56, since I'm not power of attorney, I'm guardian.
So you file the Form 56 that's notifying the IRS that the guardianship exists. But in order to communicate at all with the IRS, you then have to file this Form 2848 showing that it's not the same power of attorney as in the estate world that you're having over the person. This is just a power of attorney that allows you to communicate with the IRS. That's it. So I could fill one out for you. In other words, if you got an IRS notice, I'd say, all right, let me do a power of attorney. I'm going to put my name on there, put your name on there, and then that allows me to communicate with the IRS. That's all. Doesn't do anything else.
Just written out.
I'm still not understanding why.
Because the 56 is not, the 56 is only notifying the government that you have a fiduciary capacity for that person. Okay, that's all it's doing. You have a fiduciary capacity. In order to still communicate with them as in your capacity of guardian, you have to have the 2848.
That's interesting, because I've talked to them on numerous occasions without a 2848. Only the 56.
Well, yeah, if you can, good. If you can, good. But for the most part, they won't do anything without a 2848.
But you can sign a 2848 power of attorney as the guardian.
Correct.
Okay. Thank you for the information, because I'm kind of clueless on that one.
Any other questions anyone has?
It sounds like, Diana, maybe you got lucky in what you're doing. So
Yes.
good for you.
She's lucky that she got through to the IRS in the first place.
We have no other questions in chat.
Okay.
I'm going to turn it over to Nikki and she'll walk you through some forms. Okay.
So these are just some common tax forms that you'll encounter, either in the preparation or in the gathering of the documents to be able to prepare the tax return. The 1040, you probably all know, is your personal tax return. The 1041 would be a trust tax return. The 1040 ES is the estimated tax payments. They look like this. And that's if you have to do estimated tax payments for your ward. The 1040V is the form or the voucher that is presented if there's a balance due with the tax return. We here at the office, I'll tell you that we're encouraging people to not send a payment in via check anymore. There's ways you could go into IRS Direct Pay and pay online so that the money hits, you know, your account with the IRS immediately. We encountered that when COVID hit, there were a lot of payments that were either misapplied or never opened. And we got a lot of IRS notices because of that. So we've been, even though our system, when we have a balance, return with a balance due, produces this 1040V voucher, we're in our instructions, we're guiding our clients to do those payments via IRS Direct Pay. The 1099 SSA is the Social Security form for Social Security benefits or Social Security disability. The 1099R is a retirement distribution. 5498, there's several. This one just reports the IRA rollovers, contributions, the fair market value, but there's also 5498 SAs, which are for HSAs. That a lot of people don't know that they get those, and we usually do need them to report the fair market value of the account or see if any contributions were made to those. The 1099S and HUD are for sale of property, of real estate property. We see these a lot. I think they're issuing them more now than they did before, honestly, to report the seller's proceeds. Even if it's like a primary residence that got sold and there's no capital gain or anything like that, and there will be no tax, they'll issue this form and it does need to be reported on the tax return under like personal sale, and it will be, we'll fill out the form that indicates that they meet the exception where that gain won't be taxable. The HUD statement is, where basically we see the summary of the borrowers and sellers transactions for that real estate. The 1098 is our mortgage interest statement for the real estate property if it's mortgaged. The 1099, like Becky indicated, she couldn't find like a sample like the generic ones we've shown for the consolidated. But that usually is, to us, very important to have all the pages like she mentioned, just because it has so much information. And then this one is really, really important. It's for marketplace health insurance. We have found that a lot of people don't tell us about this, especially if they've had subsidy throughout the year. And this is key for us to have, just in case their AGI is over the threshold and now they need to pay some of that subsidy back. Our system actually just changed last year, where now it's indicating us, the IRS is actually getting better about matching those people that got insurance through the state marketplaces, and saying that Social Security number has been flagged to have a marketplace account. So you're missing this information on the return. I think last year when we were e-filing, at least 2 of my clients, I got the e-file rejected because of that. And we had to contact the client and say, do you have health insurance through the marketplace? And they were like, oh yeah, I forgot to give that to you. So this form is like really important if they do have it. And it is also important to understand that if they don't meet the requirement to have the subsidy, they shouldn't be taking it because they're going to have to pay it all back when they file their taxes. And usually that's a big surprise for a lot of people that don't expect, they have gotten $1,200 of subsidy a month to have to pay all that back for 12 months at the end of the year when they file. Any questions with those? Okay. Other helpful hints that we thought about was be proactive. You know, we do a lot of year-end planning here from like October through December. But you could be proactive all year round. Like if there's a special circumstance that's coming through, reach out to your advisor, your CPA. Let us run numbers, because there's a lot of things we can do to kind of try to match some expenses with income to offset some of that. Like an example of that is, you know, IRA distributions. If it's a year that's high in medical expenses, that's a year maybe to take higher IRA distributions so that we can offset some of that tax implications. The same when, you know, when you're thinking about triggering stock sales or property sales, when is the best time, you know, to do that? Like Becky mentioned, the tax organizer is a great tool to help you or give you guidance as to, okay, did this really happen this year? Should I bring this up? Is this something we need to consider going forward in order to, you know, for us to prompt us to ask the right questions, to help find more beneficial tax circumstances, credits, et cetera, that could apply. The documentation is really important to us. We like to have, you know, support and backup documents, source documents for most of the stuff if we can. Even if we have clients that fill the organizer like religiously, and we just, even if we have the numbers there, we like to see the source form, just because the IRS will match to that source form, and even a digit off or 2 digits off can throw the whole thing off. Another important thing would be if there's a person that's very charitably inclined and they do a lot of charity, to have kind of a summary of all those charitable donations throughout the year. The same with medical, summarizing that between doctors, prescriptions, you know, assisted living facility expenses, et cetera. Any questions? And then if you do end up hiring a CPA to help you, what are some of like the ones that a CPA might want to be able to help you? We usually ask for a copy of the prior year's tax return. So if you came to us to file the current year, which is 2022, we would always request 2021's copy. It's a good starting point for us to see the sources of income, to see if there's any carryovers that we need to take into account when preparing 22. It just gives us really good guidance. Also, a copy of the guardianship inventory for the initial year. Again, that would list some of the assets that might produce income that we need to be looking for 1099s or anything of that sort. The prior year guardianship accounting. And if there's a special needs trust, obviously the copy of the trust document, because we would need to have that in our file in order to prepare the 1041 for the SNP, if there's a filing requirement for that, et cetera. Any questions? Okay. I think that's it. We're open to any questions you guys might have regarding anything, the state, the local, federal.
We're getting a lot of thanks in the chat, but yeah, if you guys have questions, they still have a few minutes, so you guys are welcome to ask anything, or maybe even things they didn't touch upon. If you have a question while you got some people sitting, some CPA sitting in front of you. Sorry guys, not to throw you under the bus. I know you can't give specifics, but can you guys, so the question is, can you guys handle taxes for any area in Florida?
Yes. Actually, we do pretty much any state return too.
Okay. What income would trigger a return for a guardian of a minor?
So the kiddie tax basically goes over 2,200. Yeah, I was gonna say 2,000. So what happens is that unearned income. So unearned income is interest and dividends, capital gains, that type of stuff. So in the tax world, a minor is under the age of 24. Okay. So And basically they're going to get pulled in at their parents' tax rate. It's called the kiddie tax. So anytime they get over like the $2,000 mark, you need to be showing it. Actually, I think it's closer to 1,000. Yeah. And that's the individual. That a trust is totally different. A trust for a minor, that's
Different.
basically over $100 you got to file.
So this is Shauna. I'm the one with the question. So it's if the minor brought in with income from returns from investments over $2,000, then they need to look at doing a return.
Yeah.
Okay.
Yes.
And then of course we have to pull in parent and all that.
Yes.
All right. Very good.
I have had situations. I mean, I get you guys are guardians of certain people. Sometimes a parent is missing in action or not around or doesn't have anything to do with the kid. And then you basically have to wing it with their own rate. And
We
stuff.
are in that position right now. We're trying to track down mom, but hopefully we'll find her.
Yeah.
Thank you.
Mm-hmm.
So another question that kind of pings with this minor discussion is, can the money for a minor that goes over the 2,200 be sifted somewhere else to avoid taxes?
Well, if it's in their social security number and reported that way, not really. I mean, once it's reported, once the income is reported in their social security number, there's not really a way to change it.
Okay, that makes sense. And another question we have is, if the ward has an SNT with less than $15,000, does a return need to be filed?
It depends. It depends if it's, are you talking 15,000 in assets?
Yeah, it just says SNT with less than 15,000.
Okay, well, if it's income, then yes, it has to file. But if it's 15,000 in assets, it just depends on how much income it's producing. And basically a trust return, anything over $100 has to file. An estate is anything over $600.
And it looks like the same person is saying it was an inheritance and it was not invested.
Okay, so if it's an inheritance, they just got it and there's no income being earned on it, then there would be nothing to file.
And then to go back to the previous question about the minor with, can it be sifted elsewhere to avoid taxes? It said, so if their social security is under the amount of money, but they earn money that puts them over, can that be put somewhere to avoid taxes? Certainly some young people earn a little bit of money.
So the young wards that are receiving social security, that's not going to be a taxable. The social security that they received is not going to be taxed because they don't make enough other income to get them there. So it gets reported to them.
And it gets put on the return.
And it gets put on the return, but it's not getting pulled in and getting taxed. And if that's all they have is a 1099 SSA, you don't have to file.
And then I guess along the same lines with the minor, the same lines of the minor, are you saying that any minor with an income of 2,200 or more must file?
Unearned income.
Interest in dividends.
Earned income is income from a W-2 or if they work a small job and they get a 1099 NEC. But unearned income is not where they're actually working for the money. They're just getting it through investments.
So does that answer your question, Diane Wallace, about the minor with the income of 2,200?
Can you repeat again?
She said yes, it answered her question.
Can you repeat what you just said about the earned income and unearned income and the difference?
Okay, so earned income is, let's say you have a minor that's 16 years old and the minor works at Target and gets a W-2
Right.
for $1,000. That's earned income because they worked for it.
Right.
So they earned it.
Right.
Let's say they made $500 of dividend income from an investment account. That's called unearned income because they didn't really do anything to make that money.
Right. And what is taxable? The earned income is what's if you make more than $2,000 or $2,000.
Well,
Correct.
If they
Both-
only-
go ahead.
No, I was gonna say, if they only have the target W-2, unless it's more than the 12,950, they don't need to file. Okay, but if they have withholding from that job, even if it's $1,000, you want to file it so that they get that withholding back, because the tax will be 0.
Right. What happens is most of the young kids have no withholding, so it's not a big deal. They don't have to file. But for whatever reason, if they fill out their paperwork wrong and the employer is withholding money, the only way they're going to get that money back is to file a tax return. Now, I'll tell you, some of these young kids, they come through here with their parents' return. And if it's like 20, 30 bucks that was withheld, we don't waste the time to even file the tax return because it's not cost effective.
Right. Okay, good.
Okay. So that's where they get you is, you know, if they're withholding the taxes and you want that money back, then you have to file.
Okay, it looks like we got a new question. If somebody who's 65 or older receives Social Security retirement, SSA retirement, and or retirement that equals less than $25,000, they do not have to file federal taxes. Is that correct? Yes or no? So if somebody 65 or older receives SSA retirement and or retirement that equals less than 25 grand, do they have to file federal taxes?
I have to look it up. I don't think they do. Most of the time, again, there was been withholding on the pension or whatever, but if there's not been, yeah. So it depends if they're married or single. There's the table.
And again, we'll send all these documents out to you guys when we send the certificates and all the credits that you guys get for this course. So you will get this information.
And honestly, it gets into a little bit of a catch-22 not filing. And I'll give you an example. All the COVID, what do you call it? Relief payments that they gave. If somebody hadn't been filing for years, they weren't in the system. So, you know, they
So
didn't.
all the stimulus payments, they wouldn't have gotten.
Right. So
At that point, they had to go to a website and actually register to receive the payment or
right.
get a tax return in the system to trigger recognition of their ability to claim that credit. Which is another thing kind of with gathering documents, kind of be aware of what's going on in a given year, because these last 3 years with COVID regulations and
With child
you know,
tax credit.
economic impact payments and the child tax credits and all of these special things that have kind of rolled through that the IRS has issued letters at the end of the year. That all comes into play when we're filing, because we have to put that information in as to whether or not it was received. And it calculates whether or not you are entitled to it and all these other factors. And many times we get the, oh yeah, I got that, or, you know, no, I never got it. And we file it according to what the taxpayer is saying because we didn't have an actual letter because they can't find it. And then next thing you know, we're getting a matching notice from the IRS saying, oh, by the way, you claim that you didn't get it, but you actually did. And then start going down the ballpark of dealing with notices. So, you know, the more information you can get within all those weird circumstances that come up, there's normally a letter from the government, just kind of ask.
I have a question. This is Diana. Hello?
Yeah.
Go ahead,
Um,
Diana.
I was the one who just asked about the 65 plus person, but I'm looking at this chart and my people that are 65 and older, some of them have just Social Security, some of them have Social Security and a pension. But if the Social Security plus the pension is less than $25,000, I was told they don't need to file, but you're saying here, if it's more than 14,700, I'm supposed to be filing income taxes for them.
That's for a single person.
Yeah, they're all single. None of these people are married. They're either divorced, widowed, or single.
Yeah.
So I'm a little confused because the Social Security statement is looking at 25,000.
So
And when
the $25,000 figure on Social Security, what that means is once there's other income that goes over $25,000, that's when Social Security starts getting pulled in and gets taxed. If they have nothing else but their Social Security, then that Social Security is not going to get pulled in and get taxed.
But if they have a retirement, let's say their social security is 20,000 and their retirement is 5,000, that would be the 25,000. Would that hit the mark then that they have to pay taxes?
No, it's the other income. No,
If the other income is over 14,700, then they pay taxes?
yes.
Okay. Because that's a little confusing the way.
The full social security is not taxed.
Right.
Okay, thank you. That clarifies that. That kind of freaked me out there. Okay, thank you.
And just as, you know, I don't know if most of your clients that you're guardians of are younger or older, or it's a mix. But I do see a lot of times that the guardians will set up their clients to have their taxes withheld on the Social Security. I don't recommend doing that, because what happens is inevitably that ward is going to start having a lot of medical and eventually is not going to really have to pay any taxes. And once you've signed up with the government to have the withholding taken out of the Social Security, it's hard to unwind. And then when they pass away, there's typically a refund, and then it's hard to get the refund because it takes a while. So it's really, in my mind, better to deal with the ward's taxes, if you will, by making estimated tax payments and not doing withholding from Social Security. That's just a tip.
Great, thanks for the tip. We're now at 4:06. So do we have any last minute questions for anybody? Yep, we do. So if there's someone on SSDI age 63 and they get $23,000, which it all goes to their long-term care facility, and they get an additional $3,500, $3,500 from pension, do they have to file? So the 23 grand goes straight to the facility, but they have a $3,500 pension. Do they have to file?
I don't think they get a 1099 for the SSDI unless it's on the SSA.
Yeah, I don't know.
I don't think I like veterans stuff. You don't get anything. I don't think the SSDI, it's even reported. It's just like SSI is, just SSA is. So SSI, there's no reporting for SSI. That, in other words, the recipient doesn't get a 1099 SSI. They only get SSA.
Yeah, it looks like somebody's saying it may fall under SSA.
So
She got a 1099. She said, okay, thanks. She got a 1099.
So then it's getting, so you put it on there and then you have your medical and it wipes it out. Because it's going to the facility.
She said, got it. Thank you. Any other last minute questions? Oh, one more. Patricia came in late. Does one need to pay taxes on money being held in a pooled trust? Oh, you missed that part.
Yeah.
We do have this recorded too, guys, so we can send you guys the recording.
Yeah,
as well.
so that, like I said, they're going to receive a grantor letter. It's called a substitute K1 for the earnings from the pooled trust, and then that's going to go on their 1040. The recipient's 1040.
Do you know where on the 1040 it goes?
It depends.
Depends. It depends what kind of earnings are being reported. Most of the time it's interest and dividends. Sometimes it's capital gains. So it's going to be going on Schedule B and D. I had a few where there's royalties on it, and again, that goes on a different schedule, so. It just depends on the makeup of the income that's being reported to them.
She said she's got it. Thank you. Okay. And then we got, it was a great presentation and great information. So thank you guys for presenting. We really appreciate you guys being on and talking to everybody about tax stuff, especially during tax time. We know you guys are very, very busy. So thank you for coming on to talk to us today.
You're welcome.
Okay. Well, everybody have a good day. Thank you for joining. Like I said, we're going to send out the presentation, PowerPoint, and the supporting documents, and we'll send out your guys' credits for watching this. So just stay tuned and Kate will get everything out here in the next couple days to you guys. Have a good day.
Thank you. Thank you.
Thank you.